bonfire night behind us, the run into Christmas and New Year is well and truly on. The latest monthly consumer confidence survey from the consultants GfK, released on 22nd of November, gave us a bit of a sniff on how UK households currently see the world, and two sets of corporate results during the coming week could also provide useful insight on how cheerful people are being as we get ready for Christmas. Those numbers are the third quarter trading statement due from DIY specialist Kingfisher on Monday the 25th of November, and then easyJet's full year results, which are scheduled for release on Wednesday the 27th. Both firms rely upon consumers' discretionary expenditure, by and large, and they've enjoyed markedly contrasting fortunes over the past 5 years. Kingfisher benefited from a DIY boom during lockdowns, and although enthusiasm for such projects has cooled a little bit, the shares still trade well above their pre-COVID levels, even after a bit of a retreat this autumn. Lockdowns took a major toll on airline and holiday provider easyJet. It's enjoyed a major recovery in demand since, however, and thus profits since 2021, but the shares are nowhere near their pre-COVID highs, even after a decent run in the past 12 months. To start with Kingfisher's third quarter update, the company is a leader in DIY in the UK, France and Europe, with physical stores and an online presence via brands such as B&Q, Screwfix, Castorama and Brico Dépôt. The first half results in September were encouraging, and encouraging enough because Chief Executive Thierry Garnier raised expectations for cash flow and tightened the guided range for profits for the year to January 25 by raising the bottom of that range. Now, analysts are looking for a 0.2% drop in like-for-like sales in the third quarter. That might not sound a lot, but it's a big improvement on the 3.8% slide in the second, although management put some of that decline down to the timing of Easter. On a headline basis, the consensus forecast is for sales to rise by 2% to £3.3 billion in the 3 months to the end of October, and that compares to £3.2 billion a year ago. Attention will then switch to the like-for-like trends in Kingfisher's major geographic markets of the UK, France and Poland. In the second quarter, like-for-like sales were down 1.4% in the UK and Ireland, 9% in France, and 0.8% in Poland on a year-on-year basis. Kingfisher doesn't publish a full-year profit and loss account with this update, so attention will then switch to whether Monsieur Garnier reaffirms his prior guidance or refines it once more. After the changes back in the autumn, Kingfisher now expects adjusted pre-tax profit between £510 and £550 million in the 12 months to January. That's down still from £568 million last time around, and free cash flow of £410 to £460 million. That free cash flow is helping to fund a £300 million share buyback scheme, which Kingfisher is completing in 4 tranches by March of next year. easyJet's full year results will feature a lot more detail, including a full profit and loss account, cash flow and balance sheet. This, by the way, will be the last set of figures with Johan Lundgren as chief executive. He'll be succeeded by the current chief financial officer Kenton Jarvis in January. Analysts will initially turn to the headline pre-tax profit figure, where easyJet's ambitions are based on a pre-tax profit per seat of between £7 and £10 over the medium term. For the year to September 2024, the consensus forecast is for adjusted pre-tax profit of £595 million, and that's a long way up from £455 million a year ago. The details behind the headline should also be informative, especially as they may help to shape 2025, when the consensus profit forecast is currently £692 million for another healthy increase. Key numbers to watch include capacity, which is due to grow by 8% to 100 million in the year to September 2024, and then roughly 5% compound going forward. Load factor, which was 89% last year. Airline revenue per seat, where the benchmark is 2023's £79.84. And then cost per seat, which was £76.25, including fuel, and £54.30 excluding fuel a year ago. And then finally, the look for the performance of easyJet Holidays. That's expected to earn more than £180 million, up from 122, on its way to its medium-term goal of £250 million. Watch out also for any comment on future trends here, and also capital expenditure. Including leases and maintenance, this is forecast to reach £1.3 billion in the year just ended, and indeed come in the same figure for the year just begun, with further increases going forward to fund fleet expansion, as easyJet takes delivery of 16 Airbus aircraft in 2024, the year just finished, and then 9, 25 and 34 in the next 3 years respectively. Besides investing cash for growth, easyJet's also returning some to shareholders. The company returned to the dividend list with a payment of 4.5p a share alongside its September 2023 results after a hiatus of 5 years. For the year just ended, analysts are expecting 12 pence a share, with a further increase to 14.8p for the year to September 2025. I hope that you and your families are all keeping well and in good spirits. Thank you for watching, and I look forward to seeing you again next time.